The external audit. During this course, we will spend a lot of time talking about an external audit or the statutory external audit. For now, we are going to get a bit of an overview of the objective of the external audit to set ourselves up for the rest of the course. When we are thinking about our external audit, it is crucial to keep in mind the key objective or the purpose of the external audit. The external audit is the process by which the auditor obtains reasonable assurance, that high level of assurance, about whether the financial statements, our subject matter, as a whole are free from material misstatement, whether due to fraud or error, in order to enable them to express an opinion. Remember, we've got our expert, our practitioner, giving an opinion on that subject matter, on whether the financial statements are prepared in all material respects in accordance with an applicable financial reporting framework. That's about them comparing the subject matter, the financial statements, with that criteria, our applicable financial reporting framework in this case. So the auditor must do work to enable them to determine, to decide, to come to the conclusion if the financial statements are prepared in line with the appropriate framework and that they are materially correct. Materiality being a key concept within our audit engagements. We're also going to be considering whether they give a true and fair view, thinking about how that information is going to be used. If we had to sum it up, the objective of an external audit is to give an opinion. With all of our assurance engagements, we have said the practitioner is there to give an opinion on the subject matter in the form of a report, but ultimately they are coming to that conclusion. Specifically here, they are giving an opinion on the financial statements. How do we give an opinion? We must collect evidence, we must look at the information that has been provided and determine whether or not it is okay. I use that term loosely. We will see that we have those accounting standards to consider. Is it in accordance with accounting standards? Are they materially correct? Is it true and fair in terms of how that information has been presented? Could it be misinterpreted? Might it be giving a picture that is a bit too optimistic? These are some of the things that the auditor will need to determine so that they can give their opinion, their thoughts, their conclusion on the financial statements. The audit opinion itself is going to make sure that we are looking at specifically international financial reporting standards, the IFRS, or in other cases, Irish or UK GAAP. For most of the examples that you're going to see, we are going to be referring to IFRS, our International Financial Reporting Standards, or IAS, the International Accounting Standards, as the basis for preparation of the financial statements themselves. Thinking about whether they are materially correct. Now, this concept of materiality is crucial because financial statements will never be 100% correct. It's not possible. If you imagine, if you are, writing a transaction that has taken place, you buy something for $100.52, it would probably be expressed as round dollars. You wouldn't include the cents in financial statements. For big companies, their accounts are often in thousands or millions of dollars. So there is always going to be an element of rounding, which ultimately might indicate that they're not accurate. So we talk about items being materially correct, and this concept of materiality is something that we will be discovering in more detail. We then see that we want to ensure the accounts are true and fair. So as I said, thinking about them presenting that information fairly, making sure they are factual and free from bias. They could not be misconstrued or presenting a picture that is not wholly accurate. What are the general principles for an audit? Well, we want to ensure that the auditor follows and complies with the appropriate standards, as well as having standards that we want to compare our financial statements to, thinking about how the accounts themselves have been prepared. The auditors will have their own standards that they must follow to ensure that they are meeting an appropriate level of quality of work. We have to ensure that we are ethical. So we will be looking at the fundamental ethical principles. We have a whole section on those, and those are absolutely crucial. Again, bear in mind they feature in a number of the ACCA papers and are something that you will use throughout your career as a professional accountant. So those ethical principles are very important. And we also want to ensure that the auditor is maintaining professionalism and professional skepticism in all that they do, so that they are acting in a professional manner, again linking in with our ethical principles, and that they maintain that level of professional skepticism so that they are able to conduct their review and the work that they are doing in an appropriate manner. Thinking about the external audit, it is a type of assurance engagement. We saw this in another section, but just to recap, we want to remember that every assurance engagement has those 5 elements. And so what are they? When we're thinking about an external audit, specifically, we have the 3-party relationship. We have our practitioner, we have our responsible party, and we have our intended users. Who are they when we think about an external audit? Well, the practitioner is the auditor. The intended user are the company's shareholders, and the responsible party is the company's board of directors, the people preparing the financial statements. We also need to have our subject matter. What is it that the practitioner, the expert, is looking at? Well, in an external audit engagement, that is the company's financial statements. What are they comparing them against? What's the criteria that they use to come to a conclusion? Well, it is typically those IFRS, our International Financial Reporting Standards or accounting standards. What evidence are they going to be collecting? How are they going to come to their conclusion? Well, they're going to be performing audit work. So they will be completing some testing, they will be doing different analysis, we will be seeing some analytical review, for example, as well as specifically looking for evidence of transactions or valuations, for example. And finally, they need to give a report which will include their opinion. This must be in a written form, and for an external audit, it is going to be what we call the audit report. It is written by and presented by the auditor, that expert or the practitioner. What are the requirements for an external audit? It's important to remember that when giving an opinion, the level of assurance we are seeking to give is reasonable assurance. There is no option over this. This is set out in the auditing standards. The auditor's opinion must be providing reasonable assurance over those financial statements. And then we have this idea of statutory versus non-statutory. We mentioned this before. So statutory means it is required by law, whereas a non-statutory audit is not required by law but is an optional undertaking. Let's consider this example. What level of assurance and opinion wording will be given in the report of the independent external auditor? A, reasonable assurance and negative wording. B, reasonable assurance and positive wording. C, limited assurance and negative wording. D, limited assurance and positive wording. Pause for a moment if you want to have a think, and then press play when you are ready to continue. The answer here is B. By law, an external audit must be giving reasonable assurance over the financial statements, and reasonable assurance has to be expressed using that positive opinion. So the financial statements are prepared in accordance with the relevant financial reporting standards, for example.